You are watching Market Watch, the brief overview of the key events from the world of finance. Federal Reserve Chair Jerome Powell stated that the central bank is holding rates steady, waiting for more clarity on the effects of new trade tariffs. He highlighted signs of weakening economic growth and subdued consumer demand. One key concern is the impact of front-loaded imports driven by tariff expectations, which may distort macroeconomic data. Powell made it clear that the Fed is in no rush to provide stimulus, a stance that markets interpreted as a signal to reassess risk. The US dollar weakened, and bond yields declined. Financial markets remain tense amid trade policy uncertainty and the Fed's cautious posture. US stock indices dropped sharply following Powell's remarks and the escalation in trade rhetoric. The tech-heavy Nasdaq fell over 3%, with trade-sensitive stocks leading the decline. Traders were looking for signs of Fed support but heard only caution and a refusal to prop up the markets at any cost. Additional pressure came from uncertainty around US tariff policy and potential retaliation from global partners. The financial and industrial sectors were hit especially hard, deepening the bearish sentiment on Wall Street. Amid global macroeconomic and geopolitical instability, investors are retreating to safe haven assets. Gold soared past $3,350 an ounce, setting a new all-time high as confidence in risk assets declines. The US dollar continues to weaken against major currencies, including the yen and the euro. Meanwhile, European and Asian equity markets are also in retreat. Investors are awaiting new signals from central banks, but for now, sentiment is being driven more by headlines than fundamentals. Heightened geopolitical tensions and gloomy economic forecasts are boosting demand for traditional hedges like gold. New data on crypto flows between US and offshore exchanges indicates growing interest in Bitcoin on regulated US platforms. Analysts note that this kind of liquidity shift often precedes price rallies. Some technical indicators also support the bullish outlook. At the same time, Bitcoin holdings on exchanges have dropped to their lowest level since 2018, suggesting that investors are moving toward long-term holding strategies. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.